Hello and welcome to Insight with Haslinda Amin, live from the Bank of Thailand headquarters in Bangkok today. An exclusive interview with the outgoing governor of the Thai Central Bank just weeks before his tenure ends. The transition comes amid political turmoil, weak consumer demand and global uncertainty fueled by President Trump's tariffs and geopolitical tension. Also on the show, President Xi Jinping parades China's military power and diplomatic clout with a display of its latest weapons with global leaders including Putin and Jong Un in attendance. And back in Thailand, the country's largest political party throws its support behind Anutin Chanvirakul's bid to form a government following Paetongtarn Shinawat's dismissal over ethics violations. And we speak exclusively with the CEO of Thai Airways on how political uncertainty and global economic headwinds are impacting tourism, which makes up nearly 20% of Thailand's economy. Chinese President Xi Jinping hosting a military parade today, joined by world leaders, including Russia's Vladimir Putin and North Korea's Jong Un, as Beijing marks 80 years since Japan's defeat in World War II. Bloomberg's chief North Asia correspondent Stephen Angle joins us from Beijing. Steve, the mood on the ground, what are you seeing?
Yeah, well, it was a big parade, the largest China's ever held. There were a lot of people. It's finally clearing out a little bit. Gets a little breathing room right now, and our signal is up and being able to broadcast because it was an absolute crowded place full of pomp and ceremony and nationalism, and Xi Jinping up on the riser up there on the gate, the Tiananmen Gate in front of the Forbidden City and Tiananmen Square, essentially talking about the historical importance of China's contribution to the ending and the winning of World War II, something that many people here in Beijing feel that the Western powers do not necessarily respect. So that's why they held this parade today. They claim September 3rd is sort of the anniversary of the victory over the Japanese. And then they did hold it in the exact same spot 10 years ago for the 70th anniversary. Now, we did see a lot of weaponry come by. The other side of this narrative is not only the historical correctness, if you will, from Chinese perspective of China's contribution, but also a message to the West that they will not be bullied, and that they can stand beside allies like Vladimir Putin, also Jong Un, and have a respectable, sizable strategic bloc of their own against what Xi Jinping called intimidation and bullying, a veiled, a not so veiled reference to the United States. But surely there was lots of military hardware rolling past, including the latest fighter jets overhead, like the J-20A, in conjunction with the drone, the reconnaissance and strike drones that China has put lots of money into, as well as hypersonic missiles, including the Dongfeng, the DF-17, and a number of different ICBMs that have the capability to reach the United States with a range of about 15,000 kilometers or 7,500 miles. That would be the DF-41, being the latest supersonic ICBM being rolled through the streets here of Beijing.
So, Steve, a display of Chinese weaponry. We saw that in action, of course, when India, had a conflict with Pakistan. It's also a display of alliances, new alliances perhaps getting forged. Talk to us about the takeaways from what you're seeing there.
Well, surely China has modernized its military. They've streamlined it, and they've also added a lot of discipline into the ranks. Xi Jinping has gotten rid of a number of different generals, more so than any past leader since Mao Zedong. So he's trying to install discipline into the force, but he's also, through that modernization of its equipment, through hypersonic weapons and others, is to export its military expertise. It is now the fourth largest military equipment exporter to countries like Pakistan and elsewhere. So I thought it was interesting when I saw the hands clasps between Xi Jinping and Vladimir Putin and Narendra Modi in Tianjin. By the way, Modi was not here. Maybe not the best optics for the Indian leader, which espouses, of course, sort of a strategic autonomy. But again, I found it very interesting that you had Modi, you had Xi, and you had Putin really showing a camaraderie. And that was very much intended to show a message to the Donald Trump administration and the Western powers that China has coalesced a group of powerful allies to combat the U.S. world order. Whether that will come to fruition or not is another question. But at least in optics alone, it was pretty powerful messaging.
If nothing else, it is in the messaging. Steve, thank you. Our Chief North Asia correspondent there, Stephen Angle in Beijing. Now, China's display of strength comes amid growing uncertainty over geopolitics and trade here in Thailand, which is dealing with a 19% U.S. tariff rate, a tourism slump, and a recent flare-up in its deadly border clashes with Cambodia. On top of that, the nation is embroiled in fresh political turmoil following the court-ordered ouster of Prime Minister Paetongtarn Shinawatra. Thailand's largest political group, the People's Party, announced earlier today that they're backing Anutin Charnvirakul as the next prime minister to end a political deadlock. However, the group will not be part of his government and is demanding new elections. As Bangkok grapples with a perfect storm of problems, the country's central bank is also gearing up for a major leadership change. Bank of Thailand Governor Sethaput Suthiwartnarueput is stepping down at the end of the month to complete his 5-year term. He helmed the BOT during a turbulent political period that saw 3 prime ministers and 3 finance ministers within 2 years. He also faced persistent pressure from government-linked officials who wanted BOT to loosen its monetary policy. Joining us exclusively here at the Bank of Thailand headquarters is Governor Sethaput Suthiwartnarueput. Governor, thank you so much for having us today.
My pleasure.
It is such a poignant moment right now, with the situation politically in the country and how your term is ending as well. It's almost like we're back to square one, right exactly how it all started. How are you looking at the political situation here?
As you mentioned, the political situation has been challenging. I have a 5-year term here, and if things go as it seems to be going with a new government forming, I will have seen before the end of my 5 years 4 prime ministers and probably 4 finance ministers. So there's been certainly a lot of turmoil on that front. So the problem for us, Haslinda, has always been that we have a lot of structural challenges that we face. And that in order to address those challenges, we need really kind of taking a very long-term structural reform perspective. And the fact that, again, the governments have such a limited horizon, there's so much turnover, limits our ability to do that.
It's hard to talk about structural changes and reforms given that the government's always looking near term because there's just no certainty in terms of the political situation. How big a risk is this current situation to the economy, which is already struggling to turn around? 2% growth is half what we're seeing in the rest of Southeast Asia.
I would say this, that one thing that I think we've been fortunate about is that our buffers are reasonably strong. So from a vulnerability standpoint, the chances of the country kind of heading into a crisis or whatnot are fairly low. So the downside isn't huge.
Why do you think it's low?
If you look at the usual things that tend to cause a crisis, like a balance of payments crisis, right? You would expect to see, current account deficits. You would expect to see high levels of foreign debt. You would expect to see low external reserves. On that front, we're okay. The other source of crisis is a banking crisis. And if you look at our banks, they're very liquid. They're well capitalized and whatnot. Yes, there are NPLs that are increasing, but they're fairly well provisioned. So again, chances of a banking crisis reasonably low. Fiscal situation is not as good as it once was, and there's challenges in that front. But again, I think it's not approaching like Greek crisis type level. So that's why I say that, on the whole, the chances of us having that big downside of a crisis are relatively low. That said, the upside is also limited. And that's a big issue. I mean, if you look right now, right, one thing that's very clear from all this uncertainty is that this uncertainty is going to be with us for quite some time. And so that's going to be an overhang in terms of what the private sector is looking for. And again, in terms of policy initiatives, right, we want to see that kind of long-term perspective, deep structural reform. You're not likely to see that. I mean, if the deal that is talked about goes through, we're talking about a government again, that they have announced, say, 4 months into the process, and then elections. And then elections take a while again before the new government comes in. You're talking about at least, say, ballpark about 8 months where you have this government which is kind of, not there, and it's going to be very difficult for them to pass any kind of major.
Might Thailand then have to rethink its 2% growth target?
No. I think the 2% growth target this year is intact. I think that when we came out with that number again, we were, I think, somewhat criticized, saying we're being too optimistic. But I think the events have turned out to prove us correct. And largely, as we were trying to emphasize, is because the first half looked pretty good. And the official first half figure that came out from the NSDC was 3%, right? So even if the second half goes at 1%, you're still going to see a 2% number. And it's very unlikely that we see something below 1% the second half, even despite all the tariffs and all the slowdown and whatnot. So for us right now, when we look at it, we're fairly confident that we expect to see a 2+% figure this year. Our worry is next year. We have right now out in public a 1.7% figure for next year, but I would say that again, with all this uncertainty, there's some risk to that. The risk again comes to the budget. If elections happen and the budget, then the next year budget, the 2026 budget gets delayed, and that's going to hit the fourth quarter calendar year figure next year, and then that might put some downside risk to that headline figure.
We've been talking about China. China is a risk to Thailand as well. This is the largest export market for Thailand.
Yeah.
Also, the market for tourism.
Biggest source of tourism. Yeah.
So the data so far has been pretty mixed, and it's not looking good. When you take a look at the property sector in Thailand, in fact, I think Goldman said that prices could go down as much as 10% by the end of 2027. That's not good news for sentiment. That would impact Thailand even more.
Yeah. The big risk for us, I think, on the property market, we haven't seen kind of the rapid price increases that you saw in other countries and whatnot. So I don't think there's like, this kind of huge property bubble happening here in Thailand. But back to China. To me, that's where the risk is for us in terms of the impact on the broad picture of the economy. Why? It's not just because of the exports, as you mentioned. I think China is an important destination for exports, both in terms of final goods and also as part of the supply chain going elsewhere. But the big impact in terms of the overall economy is on tourism. Because as you mentioned, tourism is a huge kind of footprint here in Thailand. And the Chinese tourists haven't been coming back. So, last year we saw about 6 to 7 million Chinese tourists. This year to date, it's about 3-odd million. We expect by the full year to see about 4, but still that's kind of a significant drop-off. And while the total tourism spending has been holding up reasonably well, because we see more European tourists who tend to spend more, stay longer and whatnot, there's a distribution effect. Because the Chinese tourists tend to go to certain kinds of, do certain kinds of spending, stay in certain kinds of hotels and whatnot, and that segment has been hit very, very hard. If you go around a lot in certain areas and whatnot, you'll see like the restaurants being very, very quiet and whatnot, and that again reflects the fact that the Chinese tourists haven't been coming back.
The picture is not looking pretty. Some are perhaps suggesting that a credit rating downgrade may happen. Is there basis for that?
Yeah, I mean, if you look at the credit rating report, the kind of stuff that they talk about, they would like to see some more fiscal consolidation, which we at the Bank of Thailand have been saying the same thing, that we would like to see more fiscal consolidation, especially over the medium term. I mean, we needed to do a lot of the fiscal stuff that we did during COVID and whatnot, but now it's a time to kind of start to tighten our belts. If we don't see clear signs of a medium-term fiscal consolidation, that would be, because the particular metric that they've been flagging and paying attention to is like interest payments as a share of the budget and whatnot, and that's been creeping up. But the other thing they also cited about was the political uncertainty as one of the possible triggers. So Yeah, that's certainly a possibility.
Given the lackluster economy, is there reason to think that Thailand perhaps needs more rate cuts than that's already been priced by the market?
Yeah, I should caveat this by saying that my term is ending, so when talking about the outlook, I will not be on the next
What's your take?
MPC meeting. But I can comment on what our thinking has been to date. And I think that for us, the Monetary Policy Committee, I think, is reasonably comfortable about where rates are now. We've always emphasized that when we set rates, we do so in what we call an outlook-dependent manner. And so the outlook, as I mentioned, particularly for this year, seems pretty much consistent with what we had been expecting. So we feel that the rates as they are consistent with that, and that takes into account, again, even the newer risks that we've been talking about. The uncertainty, as I mentioned, has more to do with next year. And then again, that I think we need to see how things evolve on that front. But the thing I would urge also to keep in mind is that we do have a limited amount of policy space left. Rates are 1.5%. That's about, what, the fourth lowest in the world? I think that's only, what, Japan, China, the Swiss have lower rates than we do. So there's not a whole lot of policy space and room left to cut rates. And I think one of the lessons that we've learned, right, is that there will be shocks that we never anticipated that will come along, and that it's important, again, to maintain the policy space to try to handle those things.
You said that 1.5 is already low. We had Nomura coming out to say that given the current situation in the economy, terminal rate should be below 1%. What would force you, under what circumstances, I suppose, should rates go below 1%? What needs to happen?
A material deterioration in the outlook. As I mentioned, we're outlook dependent, right? So if we see a material deterioration in the outlook, then that would warrant further rate cuts. And again, I have to emphasize that we have what we call a flexible inflation targeting framework. So we don't look just at the GDP numbers, but we also look at what's happening with on the financial stability front. We have very, very high debt, so that's always another issue. And also, what's happening with the inflation outturns. So we take those three things into consideration when setting our rates.
Throughout your time, you resisted calls to cut rates further. Given where we are right now, with greater clarity on where inflation is, inflation has been pretty benign. Should you have cut more? Should you have cut earlier to ensure that growth is actually better than where it is today?
One can always argue about whether at the margin you should have cut 25 basis points here or there, sooner, later, slower, whatever. But broad picture, broad strokes, I think we're ballpark, we're roughly where we need to be. And why do I say that? If you look, I think it's fair to say that we haven't been dogmatic in terms of our approach towards rates. Yes, right now there's still calls for us to cut rates and whatnot, but you look at what we did over, again, 5-year term. When COVID hit, we brought rates down all the way down to 0.5%, because obviously big crisis, we had to do what it takes, brought that rates down to 0.5%. Then we got the Ukraine thing. Inflation here peaked, right? 7.9%, highest in the region. At that point, we were facing calls consistently that we were behind the curve, we needed to raise rates, faster and by more, chunky bits, right? 50 basis points a time. We said no, because we saw, again, our economy is recovering much more slower than others because we're so tourism dependent. So we took what we called a gradual measured approach, gradually increased rates, and we raised them back to 2.5%. We were aiming to try to get it back to neutral, which is ballpark in that range. But then come the next phase, which is where we were facing structural headwinds. The recovery, as you mentioned, has been slower than we expected, particularly in the household income front. We got new shocks with the tariff shocks and whatnot, and so we felt that, again, it's important to move from a neutral stance to a more accommodative one, and that led to our next phase of, again, lowering rates back down to 1.5%, which we feel, again, is broadly appropriate for the situation that we have. I know that on the optics, it's easy to kind of say you should cut rates. Why? Growth is kind of below your potential, inflation is below your target. From a financial stability standpoint, right, credit isn't going all that fast, so you shouldn't be worrying about the accumulation of debt, household or otherwise. But it's our job to not do the easy thing. It's our job to look beneath the numbers and not just kind of look at the headline numbers and look at why those numbers are why they are. Why is growth below potential? Why is inflation below target? Right? And if you look
but
at
it is your job to look at inflation and growth.
Absolutely.
Lackluster growth at 2%.
Yeah.
If you had cut rates 200 basis points instead of the 100 that you did, would growth have been much higher?
Short answer, very little. And that's why I say it's important to kind of look behind the numbers and look again, why is growth so low? Why is inflation below target? So if you look at the growth pattern in Thailand, right? Every time we get hit with a crisis and we recover, it takes us a while to recover. When we recover, we come back at a slower growth trajectory. So, we went after post, 1997 crisis, about 5%. We got hit during 2008 with the global financial crisis, tracked down to 3%. After COVID, it went from 3+%, now down to 2+%. So that's that trend that you're seeing, which does not reflect, the cyclical stuff about whether rates are at this or that level. That reflects structural stuff that we're seeing. It reflects the lack of resilience in the economy, that we're not able to rebound back from these shocks and these crises. A lot of it reflects stuff like demographics, right? You got fewer people working. The only way to get our growth up is to get higher productivity, but we haven't been investing, right? We haven't been getting new kinds of technology, increasing our capacity in that front. So those are the kinds of things that we need to address. And rate cuts alone are not going to deliver that. You look at inflation, again, below the target, agreed. And it's actually been negative for a couple of months now. But again, our job, look behind the numbers and look at, why is that inflation coming in below target? And it's not because of, this kind of deflationary problem, negative wage price spiral, people aren't spending because they expect prices to go down. No, it's largely because of supply side stuff. A lot of it's energy, a lot of it's raw food. And that's not, again, stuff that interest rates directly can affect. So again, and when we look at the broader picture, we don't see that signs of big risk of deflation. So again, I take your point. You look at the numbers, it looks like we should be cutting, but again, it's our job to kind of look.
Governor, your successor, Governor Vitai, is known to be pro-rate cuts. He's aggressively pushed for that, pretty much in line with what the government has been proposing. Is there a sense, perhaps, that he was chosen as governor because of the stance that he's adopted? Because there was a very well-respected deputy governor who was in the right place to take up that position. It's
not for me to comment on what the selection committee and the Minister of Finance, who was the one that made the final proposal to cabinet about the reasons for choosing the governor. I won't go there. But I would say, just getting back to what we were talking about also, Haslinda, which you were saying, if we had cut rates, sooner, whether we would have seen a stronger growth impact. And like I said, I think the thing that we also need to consider is, if you cut, right, what's the upside that you get from it? And also, if you cut, how much room, how much policy space do you have left? Please keep in mind that we got calls to kind of cut rates from, even way back, even before the tariff stuff happened. So imagine if we had cut rates, as people were calling for us to do, and then we got the tariff shocks, and then we're out of ammunition. What do we do? Both on the fiscal side and the monetary side.
Governor, I'd like to get back to the upcoming governor, the new governor, because Fed independence is, or rather BOT independence is a huge question for the market right now. What messaging do you think this is sending to the rest of the world, to investors interested in putting money in Thailand, when that independence is in question?
Are you talking about for the Fed or for Thailand?
For the BOT.
For the Bank of Thailand.
It seems like both central banks are in the same situation.
There's no doubt that we have been, and I'm sure will continue to be, under pressure. And it's what we see happening, again, as you mentioned, not just in Thailand, but in many, many different countries. But I think, if anything, we've demonstrated that we are able to maintain independence and try to do what's right and not pay, necessarily. We need to listen, but not to kind of pay undue heed to the demands of government. So I think, in a sense, the independence has been what I would call, tried and true and proven. And I would emphasize this, that
so far, but going forward, that is the question, because we had the finance minister, Pichai, who said that, now the BOT and the ministry will work hand in glove, meaning that the BOT will do what's in line with the government.
working together doesn't mean you have to actually, do exactly what the Ministry of Finance tells us to do. So I think in terms of collaboration and cooperation, there are many things that we have, even, during my term when there was all this turbulence on the political side that we worked closely with the Ministry of Finance on. But I will say this, Haslinda, that independence of the central bank, of any central bank, but including the Bank of Thailand, is not just about one person. It's not just about the governor. It's broader than that. It's about the whole governance framework that you have. It's about the legal setup you have. And it's about, if I may say, kind of the whole institution setup.
So you are confident that Governor Vichai will not cut rates more aggressively than what's needed?
I can't comment on the upcoming MPC decisions. I'm not going to be.
The concern is that because he stands for aggressive cuts, that he may be doing that. Is that concern that he might end up doing that?
You'll have to ask him that, but it's not for me, to comment on what the MPC is going to do going forward. I can tell you what the embassy has been thinking and has been thinking, and that's what I commented on. But what I was trying to say, Haslinda, was that the independence of the central bank is deeper than just one person. There's this, we've been around 80 years. There's this long tradition, I think, of independence, of being, technically very sound, technocratic people. There are 3,100 people here working. So it's part of the DNA of the place. So I don't think it's something that, just depends upon one person. There's a whole kind of ecosystem around that, right? Well, the other thing you have to see, and we'll have to see, I'm not saying there are no risks to this, I'm not being sanguine. We have to see what happens with the Monetary Policy Committee. There will be changes in the Monetary Policy Committee going forward, both this year and next year, because some members...
Governor Sethaput,
okay.
Hang tight. We'll continue our conversation.
Okay.
We'll have more with Sethaput, Suthiwartnarueput, Governor of the Bank of Thailand. Keep it here with us. This is Bloomberg.
I hear they're going to do it in September, not today. For what reason? Nobody knows.
I'd love him to lower interest rates.
Well, we call him too late for a reason. He should have cut him a year ago.
With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
That was just a sample of President Trump's repeated attacks on the Fed and Chair Jerome Powell in recent months, urging him to cut interest rates. The central bank has held off on rates to this point, but Powell did open the door to a rate cut in his speech recently. Let's get back to our guest today, Governor Sethaput. What's the sense you're getting from the repeated calls for the Fed to cut rates? I mean, the Fed independence, a big question mark for the rest of the world. We had the likes of Lagarde saying that it is a danger to the global economy.
Yeah, I guess the term I would use, it is unfortunate because, there are many things that economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. And it's a tried and proven thing that it works, it's important, and that there are many examples of what happens when you violate central bank independence, both historically and if we look across the world, many countries that violate that, the problems that arise that come about when you violate that. So it's a hard-won lesson. It's a shame that it's being, I think, not remembered as well, especially in, again, the place which is supposed to be the world's safe haven. So. And that there's a danger that there are spillovers, negative spillovers, right? Because if people start to see, even in the U.S. this can happen, it kind of increases the chances that it happens somewhere else. Because people can say, look, even in the U.S. they're doing this, why not do this?
What might the repercussions be for the rest of the world? This is the most important central bank in the world. It sets a policy tone for the rest of the world. How might this play out?
Well, I don't know how it's
to the global economy, to the point that Lagarde said this is dangerous to the global economy. How might this play out?
Well, I have to say I don't know how it's going to play out, but I mean just the kinds of things that
a
we're
weaker
seeing.
dollar?
Sorry?
We're already seeing that, perhaps?
Yeah, the stuff that you're seeing is very interesting, right? The yields are going up and the dollar is weakening. So those are the immediate market effects. But again, it remains to be seen how the whole rest of it plays out. But again, like I said, I think some of the effects that we worry about, regardless of how it plays out, is how do I put this? It increases in a sense, the scope of what is. I don't want to use the term acceptable. That's not quite the word, but in the realm of the possible, things that we never thought, were likely now, seem to happen. And I think it's also brought into, I think, stark relief that a lot of things that we kind of took for granted, that we thought were checks and balances, that we thought were guardrails, were just norms, and that those norms can be violated. So yeah, I think those will be some of the.
How concerning is it to you when you take a look at the current bond route, global bond route, and we're seeing 30-year yields inching ever closely to 5%? Surely these are signs that someone like you in your position as a governor will be looking really closely.
Yeah, again, not entirely welcome, especially since you look at the broader fiscal picture. The fiscal situation globally is not a good one. Public debt is again way too high. Again, we haven't seen the kind of fiscal consolidation that we need to see after COVID. Again, COVID was an exceptional thing. We needed to kind of do the fiscal stuff at that point, but we really needed to retrench after that, and we haven't seen that happening as much as we should. So that with the high debt stock and you have these yields going up, it does create the vulnerabilities that we need to keep a close eye on.
What are the implications for emerging markets in particular when you see such high yields? We talk about the bond vigilantes when they take action. It was only the bond vigilantes that could actually make Trump listen.
Right. I would argue, Haslinda, actually that the first immediate channel that hits emerging markets like us in this region most directly is less on the bond market side, because most of our economies are more bank-based rather than bond market-based. So even if global yields go up and our yields go up, it hits us relatively less. The main channel hits us immediately is the dollar. So what we've seen with the dollar weakening is we've seen currencies in the region tend to appreciate. And one thing that we normally would expect and would normally like to see is, with the tariff shocks, we would normally expect the tariff-imposing country, in this case the U.S., we would expect that currency to appreciate, and the currencies in the other regions tend to depreciate. That hasn't happened. It's gone the other way around. And that's caused the exchange rate, which normally we would want to act as a shock absorber, to not play that role. And I think the appreciation of the exchange rates, not just in Thailand, but across the region, has exacerbated some of the adjustment difficulties to the tariff shock that we've all been.
How much capacity, how much appetite is there to perhaps manage that? Because the dollar is set to depreciate even more from here. That's the expectation of the markets, at least.
Yeah. I think again, most of the countries in the region, Thailand included, we have a managed floating exchange rate system. So we don't have a target level that we set. We allow the exchange rate to move in line with fundamentals and whatnot. But again, the movements have been quite marked. Our volatility has gone up quite a bit. The Baht volatility, it's about 8% now, close to like the Korean won, which is a higher volatile currency, which is not good for us. So, in terms of our response, it's been more to try to manage that volatility, to prevent that excess volatility from happening too much, but rather than trying to steer the direction one way or another, which we know is very, very difficult to do.
It's not just about the dollar, it's also about the yuan. Some talk about perhaps competitive devaluation. If we continue to see the yuan decline from here, that's detrimental to your economy as well.
Yeah, but like I said, I think, a lot of the countries in the region, there's still enough of us that are still around, present company included, that still remember the 1997 Asian financial crisis. A lot of us are retiring, like myself, but there's still a bunch of us around that still remember that and still recognize the lessons and the dangers of trying to, basically do too much in terms of trying to keep exchange rates at a certain level for competitive reasons.
Prosper thy neighbor. I've covered this region for a very long time. And just when there are signs that, the region's picking up and growth is intact, here we are, not just in Thailand, but Indonesia, seeing a lot of violent protest. I mean, how concerning is it that the region itself it's pretty much unstable. Growth in question.
For me, the lessons actually that you're seeing from what's happening in countries like Indonesia, or even to a certain degree, but we see signs of it here and elsewhere, is that it's important not just to look at the growth, the headline numbers, but to look at where that growth goes. So I think one of the messages and one of the takeaways is the importance of paying attention to issues about inequality, issues about opportunity. I think the rise of populism that we see in a lot of places reflects the fact that they don't feel that growth has delivered for people, right? That some people are, very well off, and then other people aren't getting the benefits. And I think it's that sense of loss of opportunity, right? That creates that sense of frustration. I think that's what we need to pay a lot of attention to, and not just, again, this kind of short-term stimulus, get the headline growth numbers up.
But when you expect tariffs to bite, and this region is looking at tariffs anything between 10 and almost 40%,
right,
you can expect the region to actually be saddled with a lot of challenges.
Absolutely, absolutely.
What are some of the things that need to be done, to be adopted? What policies need to be implemented in this part of the world to ensure that growth remains intact?
Yeah. For us in Thailand, I would argue, again, given what we had talked about initially, right, that far too long, and not just any government, every single government over the past, I would say, even 20 years, the focus has always been on that, short-term stimulus stuff. Handout, stimulus, and we haven't paid attention enough to the structural stuff. And for me, this is like, we use that cliche term of a wake-up call. This is about as clear a wake-up call as you can get, that we need to kind of get our house in order on that front. And I also think that what will happen eventually, it will take a while to play out, is that things will realign. There's an action and there will be a reaction. We don't know exactly how it's going to play out, but it will play out. On the tariff front, again, as we know, the U.S. at the end of the day, it's 15% of the kind of the final import demand. So there's still 85% of the rest of the world, and so the rest of the 85, we kind of need to reorganize and whatnot. That's, again, not to downplay the importance of the U.S. by any stretch of the imagination, but I think it's just again, a stark reminder that, again, we need to find these new avenues of growth.
Governor Sethaput, you've navigated, I guess, a turbulent 5-year term.
A very long 5 years.
You would agree with me on that. I'm just wondering if there is anything that you would have done differently. Any decision you would have.
Yeah. I mean, Haslinda, in terms of the broad strokes of what we were doing in terms of the adjustment, particularly on the monetary policy front, which is what most people pay attention to, I think broadly, we kind of got that right. The right calls at the right time, the big calls, and again, I'm not saying exactly every single 25 basis point up or down we got right, and you can always argue about whether that should have been 25 basis points higher or lower, and one MPC sooner or later. That stuff I take, but the broad contours of what we did, which was to bring rates down a lot during COVID, not raise them too rapidly during the Ukraine thing, and then gradually lower them down to where they are. I think broadly that was right. My takeaway, well, I'm not saying it by any stretch that we got all the stuff right. There was the one thing I am relatively proud of, me and the team, is that we didn't just pay attention to the short-term stuff. We also try to make sure that we put in place the longer-term foundational stuff in place. So we did things in the financial landscape about open infrastructure, open payments, open data, open competition. So virtual banks, cross-border payments, things like that we continued to do. The thing I would have done differently, there was some stuff on the longer-term structural agenda which turned out to be a whole lot harder to do than I had thought, and that the lead time to do it took longer than I thought because there was a lot of pushback. So I wish I had started that stuff sooner. So for example, credit guarantees, that's very important because we've seen SME credit kind of trend down. I worry about that. We need a way to address the credit risk on that. So we've been pushing this thing, but it took much longer than we expected, so I should have started that process sooner. The other thing I think was very important for us is open data. I think that's a real kind of game changer. Try to get the freer flow of data to float around. And we started that in the plan, but again, given the amount of pushback and resistance we got, I wish I had done this sooner so I had more lead time to do it and have kind of taken us further along than where we are today. So those are the kinds.
What a ride it's been.
What
and congratulations on the BOT being named Central Bank of the Year 2025. So ain't too shabby, Governor. Thank you so much for your time today.
Thank you very much.
Sethaput Suthiwartnarueput, Governor of the Bank of Thailand here in Bangkok. Still ahead, our exclusive interview with the CEO of Thai Airways. Hear what's next for Welcome back. You're watching Insight, coming to you live from the Bank of Thailand headquarters here in Bangkok. Well, Bloomberg Intelligence believes Thailand's slump in Chinese tourism could show tentative signs of easing in the fourth quarter. That's as it sees the pace of booking declines moderating, particularly around the key Golden Week holiday in October. The pickup in Chinese travel demand is seen to help the recovery of airlines like Thai Airways. The national carrier stock is up 20% after resuming trading for the first time in 5 years last month. That's as it emerged from its $12 billion debt restructuring. My next guest runs Thai Airways, the state-controlled airline and the fifth largest carrier in Asia. Joining us exclusively is CEO Chai Eamsiri. Kun Chai, good to have you with us. We've been talking about the political situation here in Thailand. Is that impacting sentiment in any way? Is that impacting your business in any way?
Yes, maybe it's maybe impacting the confidence of the countries a bit, but actually, we Thai Airways, we are we lay down our new strategy that we will becoming the network airline. So that's the difference is in the past we carry passenger from other country into Thailand back and forth, but now we can carry the passenger from one country through Bangkok and to the other destination. That's the difference from the past and now. So this is a way that we can reduce risks that relying on depending on heavily on only one single market. Yeah.
So in terms of Thailand as a holiday destination, a business destination, has that been impacted at all in any way? Are you seeing perhaps a decline in numbers? Add to that, of course, we have the border situation between Thailand and Cambodia.
As a visitor or the traveler coming to Thailand, the only one area that dropping is the China market. But the rest, for the rest of the market, European, India, Australia, other northern Asia is still growing. As I said, the only impact is China. But China, there's some other issue, like a safety issue, the confidence to travel into Thailand. During the past, early this year, we have a problem on that. But we, as a Thai Airways, we carrying the passenger not only to Thailand, but also through Thailand to the other city. So it's different picture between Thailand and Thai Airways. Because most of our passenger is the individual FIT, not the group. Mostly the group travel with the low-cost carrier. We FIT travel with us. Some of them into Bangkok, and some of them passing through Bangkok to other countries.
You talked about how you're seeing growth apart from China when it comes to passenger numbers. Can you shed some light as to what the numbers look like?
European round, we fly to 11 cities in Europe. Two of them are double daily, but actually we have even the short-term plan. We will increase the capacity to Europe as we see the number from European coming into Bangkok and again going through Bangkok to the other region. The number that increase, of course, the European traveler and also Indian into Thailand and Australia into Thailand. North Asia, maybe Japan is slowing down, but there's a lot of Thai going to Japan and Korea. As a conclusion, the number coming from the other area still growing 2 to 3% from last year. Is showing that there still have some demand from the especially long haul passenger.
Given the optimism that you're expressing, what are your expansion plans for the next several years?
As I said, we will make Thai Airways, which situated in Bangkok, to be the hub for this region. Our expansion will be mostly to Europe and also through the Asia Pacific, especially India and China in the future. We will receiving the narrow body end of this year, and next year in total is 17 of them. This aircraft will be cater all of the passenger among Asia Pacific. They can fly up to 6 hours, which can connecting our intercontinental passenger through regional city in Asia. That's our strategy. And on top of that, not only feeding our aircraft by ourselves, but also using our partner, whoever, like a star partner and also the non-star partner. We open for that. And actually we have a lot of code share and SPA. SPA stands for the Special Private Agreement with the non-star partner also. So this can be strengthening our network by using the partner. We also selling a ticket to them also. So this is a good this example of collaboration between partners.
Right. You talk about taking delivery of new aircraft, but we know there is a shortage of aircraft at this point in time. What conversations are you having with the likes of Airbus and Boeing? What are the indications from them?
From Airbus, the narrow body, we already firm with them. This one will be the lease aircraft from the lessor. 32 of them is already confirmed. The first 2 will be coming end of this year and will be in production by early next year. The 15 of them is on time next year, and the rest still on time. So 3 years from now, we can get it all 32. But for the wide body, we just have a commitment with Boeing end of 2023. The first one will be, the first lot will be delayed a bit, about 6 months. At the initial plan, the first fleet will coming in mid of 2027. But we have been noticed by Boeing that it will be about 6 months delay. That means it will be coming in end of 27 and will be in traffic by early 28. Yeah.
Khun Chai, because of the shortage of aircraft, a lot of airlines are actually turning to second-hand aircraft. Is that something that you're looking at as well?
Yes, definitely. We are open for it. We have a big eyes on the used aircraft, but every airline facing the same problem. So the difficult part is every airline holding the aircraft, the old aircraft, because they get a late delivery in from the new production aircraft. So it's very rare to find the used aircraft in the market, but there are still some. But we have to put more effort to get that aircraft. But the problem is, it may be 1 or 2 or 3 aircraft available in the market. But those aircraft are different configuration in the aircraft. We have to think about that also. Ideally, we would like to have one sizable number of aircraft which have the same configuration. For example, 8, 10 of them by having the same configuration. That's the most difficult part. Yeah.
We know that Thailand is still in negotiations to bring that 19% tariff down. And we also know that a lot of these negotiations with the U.S. actually involve a component involving aircraft deals. Are there any plans whatsoever for Thai Air to be buying more Boeing planes?
As we know, we all know that we already fully committed for the firm order of 45 Dreamliner, but together with 35 options.
Kunchai, I'm afraid we have to leave it there. Great speaking with you. Chai Eamsiri, CEO of Thai Airways, and that is it for Insight Live from the Bank of Thailand headquarters here in Bangkok. Keep it here with us. This is Bloomberg.